Money Talks, I'm Cathy Yang, your intel on the Philippine markets and the economy. In the headlines, oil prices barely moving a day after the U.S. captured and jailed Venezuelan President Nicolas Maduro.
We're going to run the country until such time as we can do a safe, proper, and judicious transition.
Philippine retailers gear up for 2026 as they tally up their Christmas holiday shopping sales. Roberto Bobby Claudio Sr., chairman of the Philippine Retailers Association, joins us live. And Philippine markets trade for the full week for the first time this year. We get some trading ideas from Jonathan Ravelas of Reyes Tacandong and Company. Oil futures barely moving one day after America captured Venezuelan President Nicolas Maduro and jailed him with his wife in New York City. Benchmark Brent crude sitting at $60.93 per barrel, up by about 1/3% in Sunday night trading New York time. While West Texas Intermediate rises by 0.2% at $57.44 per barrel. Analysts say it's unclear if Maduro's overthrow has any impact on global oil in the short run, but it could lead to supply disruptions in the near future. After months of framing its conflict with Venezuela as a crackdown on drug trafficking, the U.S. is now moving to tap the country's vast oil resources by clearing the way for American firms' energy to return. The Venezuelan government claims it has 300 billion barrels in crude reserves, but the world has less appetite right now for more oil, as global supplies are expected to rise in the coming year. Maduro, a self-described socialist who led Venezuela for over a decade, and his wife, Celia Flores, will appear before court on Monday over charges of narco-terrorism, conspiracy to import cocaine, and possession of machine guns. Preliminary reports show Maduro's capture, dubbed Operation Absolute Resolve, has caused about 40 deaths, though no U.S. soldiers were killed. U.S. officials rejected criticisms that the administration is seeking regime change and nation building in Venezuela, contradicting what President Trump said last Saturday.
We're going to run the country until such time as we can do a safe, proper, and judicious transitions. We're going to have our very large United States oil companies go in, spend billions of dollars, fix the badly broken infrastructure, the oil infrastructure, and start making money for the country. And we are ready to stage a second and much larger attack if we need to do so.
Vice President Delcy Rodriguez has been installed acting president and in her first speech called for Maduro's immediate release. But in an interview with The Atlantic magazine, Trump warns that if Rodriguez won't accede to U.S. demands, she could, quote, pay a very big price, probably bigger than Maduro. In a statement out this morning, the Department of Foreign Affairs says it is viewing the situation in Venezuela with concern. The DFA stresses the relevant principles of international law and urges concerned parties to resolve disputes peacefully. Venezuela is home to 74 Filipinos based on the DFA's latest count. Some lawmakers have given their 2 cents about the extraordinary events over the weekend. Senator Amy Marcos says the capture raises serious questions under international law, with Akbayan Party List Representative Percy Sendanya warning the move could give license to Russia and China continue their, quote, illegal aggressive acts, while Senator Jinggoy Estrada urges caution in making conclusions. Turning locally now, how did the Christmas shopping season turn out for Philippine retailers against the backdrop of a slower growing economy driven by governance and corruption concerns? The holiday season typically contributes 20 to 30% of the retailer's overall annual sales. With us now for more is the chairman of the Philippine Retailers Association, Roberto Bobby Claudio Sr. Good having you on, Bobby, and Happy New Year.
Good morning, everyone. Good
All
morning
right.
to you.
So, how did that turn out for the retailers over the Christmas holidays? Did we see Filipinos cancel Christmas?
No, they didn't cancel, but they somehow cut down their Christmas presents this year. Yes, we did see a slight drop from previous Christmas in 2024 this year.
How slight was it?
We're looking at about maybe a 8 to 10% drop.
Isn't that huge?
That's not huge considering that the e-commerce did come up with a higher return. Simply that consumers, because of the low consumer confidence, because of the existing issues that are being discussed,
Governance issues?
governance
Not
issue,
inflation, is it? Or is it also food inflation? Or the
it's
lack
very slight.
thereof?
In fact,
Very
the
slight.
food inflation is very slight. It was well managed by the government. What happened was because of the low consumer confidence, because of the governance issues and the corruption issues, and also we did see a lot of La Nina effect. Over the last 2 weeks, we had plenty of rain, so people hesitated to get out of their houses. So what they did was either they cut down on their budget instead of giving apparel or shoes. Christmas, they decided to give breads and cakes. So they just simply reduced, or they did online. So
They reduced spending and they went online. They saved them probably transport and
Right.
and
And
pulled it all
yeah.
in for food.
Correct,
So
correct.
food, anybody in food manufacturing got a bump up. Is that
Yes,
correct?
yes.
Did that make up for the loss in all the
No,
non-discretionaries?
it didn't. It didn't. It's just there's really a drop that we see this Christmas, mainly on those two issues.
And also interesting that you mentioned e-commerce because the competition is really getting tougher. How did that turn out for retailers in the brick and mortar and what they did, considering that they knew the competition was going to get a little
Right.
bit tougher this Christmas season?
This was well anticipated by the Philippine retailers all over the Philippines. We are not against the online. Yes, it's a direction where future retailing will head, and people will start moving over to higher percentage of using online retail purchases. But we are concerned simply because government regulations hasn't caught up with the trend. As you know, online purchases on e-commerce, because of our de minimis law in the Philippines, anything below 10,000 addressed directly to consumers is not subject to tax nor any customs inspection. And this is where the unlevel playing field has created for the Philippine brick and mortar participants. We import goods, we sell, we pay VAT, we pay import duties. E-commerce customers go online, order from a Chinese merchant, sends to the Philippines, no customs inspection, no VAT, definitely we will sell at a lower price than we do.
So there is uneven competition already in the e-commerce space, but what about the brick and mortar space? Because there have been
Yes.
reports that there have been preferential treatment given to foreign retailers in shopping malls and stores. Is that about right? I mean, what are you hearing from
Yes,
your channel checks?
we are getting reports. In fact, we got several letters already from some of our members to address to the Philippine retailers if we can do something about this concern. There seems to be, well, Philippine retail market is flourishing. So it has a big market. It's an attractive location and geographic advantage all over the Philippines. So they're coming in. A lot of foreign inquiries, foreign brands are coming in and they're inquiring about the Philippines. So that speaks well of the retail industry. But then what's happening is the malls have not expanded enough to cover for these foreign brands that are coming in. So some local brands are being eased out in favor of in favor of foreign retailers who they feel can generate a bigger sales per square meter, which we among the retailers are concerned because sales per square meter isn't a measure or a yardstick on the part of the Philippine retail.
So what should be the yardstick then?
The yardstick should be sales. Because when you go for sales per square meter, then there goes consumer experience. We will get the smallest space that we can, dump as many goods as we can, never mind how it looks like, never mind whether the consumer gets stripped all over the store. So we feel that the sales per square meters should not be a yardstick because we want to give good experience to customer. Spacious stores, finding products easy. So you need spaces that are non-productive.
And what have the mall owners said about this?
And well, they're now reviewing that because I guess they're being offered by the foreign brands with an offer to say, okay, we can give you a higher rental for this location, but provided someone has to move and somebody has to be moved out. So that's our concern now. They make sure that the balance between local brands and foreign brands be even, and that Filipino brands and entrepreneurs should be given the opportunity to compete with foreign brands.
Have you heard back from the Philippine Competition Commission, because you said that you wanted to bring this up to them to establish that evenness?
Yes,
in
we did raise it up already with some of their directors. We're in discussion right now on how this is affecting, but they are concerned, PCC is concerned about the competition atmosphere in the Philippines, particularly in the retail industry. Remember, retail industry is the easiest and the most convenient entry level for any budding or upcoming Filipino entrepreneur. They sell in the offices, their tapa and their tuyo, and then they eventually come up with their own store, and then eventually come up and be able to put up a mall location to be able to generate. It's an easy business to do because if you feel that some products are not selling, you just simply shift products. Unlike manufacturing, if you start putting up the manufacturing facilities, it's not easy to move to another product if your first effort fails. So we want to give these opportunities to Filipino retailers. And the retail industry is responsible to make sure that the atmosphere of competition and offering Filipino entrepreneurs a better opportunity to trade. We
have about a minute. What's the outlook then for 2026? As you said, 10% sales decline for Christmas shopping, and as I understand, Christmas shopping sales account for about 30% of total retail sales growth in a year.
For most retailers, December is the key. It's either they make or break the year, because it should be equivalent to about 2 to 3 months sales. So with this drop this December, we see that we need to really ramp up for 2026, and we see a positive activities that will happen in 2026. We are, by the way, launching the VAT refund for tourists. So it will most probably be implemented by the first quarter of 2026. It's right now undergoing the IRR from the Department of Finance. And that should bring in more purchases to retail industry and also bring in more tourists to the Philippines. We're the only country that doesn't have a VAT refund for tourists, unlike other Asian countries. About 7 and 59 other countries in the world do it, and we didn't do it for many years. So that should be a welcome opportunity for Filipino retailers to be able to take advantage of.
And hopefully the tourists get to buy local.
That's the essence of the Tatak Pinoy that we're undergoing. It's a mindset, it's a movement. In fact, I'd like to title that Tatak Pinoy Muna. I mean, we're not saying just because it's a Tatak Pinoy, if the qualities are inferior. No, don't. What we're saying is there are already Philippine brands, Philippine manufacturers, Philippine products that are competitive worldwide. So let's give it a try and and try
It's also a good message for the locals to buy local.
Yes.
Well, thank you so
Thank you
much,
very
Bobby
much.
Claudio of the Philippine Retailers Association.
Thank
Great
you,
start
Cathy.
there for
Thank you for having me.
2026. Well, President Bongbong Marcos is set to sign the 6.793 trillion peso 2026 national budget today, January 5th. Malacanang says the president spent the holidays reviewing the budget line by line after Congress ratified the measure late last year. Once signed, the 2026 General Appropriations Act will formally take effect. But ahead of the signing, budget watchdog Social Watch Philippines is urging the president to veto about 319 billion pesos in what it calls highly questionable last-minute insertions. The group warns that these could revive pork barrel-style spending and undermine transparency. The palace says any vetoes will be detailed in the president's budget message. Finance Secretary Frederick Go and the National Treasury are urged to return over 107 billion pesos to the Philippine Deposit Insurance Corporation, or PDIC. Citing a Supreme Court ruling, the group One Sambayan Coalition said the funds transferred to the Treasury in January 2025 are trust funds for bank depositors, not government property. The funds were remitted under a special provision in the 2024 General Appropriations Act tied to unprogrammed appropriations. In its decision, the High Court voided that budget provision and a related DOF circular, ruling they were issued with grave abuse of discretion. It also stressed PDIC reserve funds cannot be transferred to the national government or any of its agencies. The group said the ruling is final and creates a clear legal obligation to return the money. The Treasury and the Finance Department have yet to comment on the matter. Executive Secretary Ralph Recto, the former chief of the Finance Department, earlier said the transfer complied with the congressional mandate under the 2024 budget. The same provision was also used to authorize a transfer of 60 billion pesos in excess funds from PhilHealth. You're watching Money Talks. Coming up, analysts see December inflation easing. And we speak with Jonathan Ravelas of Reyes Tacandong and Company on the first full week of trading. Keep it here on One News. Welcome back to Money Talks. I'm Cathy Yang. Headline inflation likely eased to a 5-month low in December, driven by falling rice prices and lower electricity costs. A Business World poll of 14 analysts yielded a median estimate of 1.4% for the Consumer Price Index in December. That's within the Bangko Sentral ng Pilipinas' 1.2 to 2% forecast for the month. If realized, this would be slower than the 1.5% in November, as well as a 2.9% clip in 2024. December would also mark the 10th straight month that inflation stayed below the central bank's 2 to 4% target. It would likewise bring full-year inflation to 1.6%, in line with the Bangko Sentral's projection. The Philippine Statistics Authority is set to release official December and full-year inflation data on January 6. That's tomorrow. And a check on the markets now. U.S. markets started 2026 a mixed bag despite a rally in tech stocks. The Dow rose by 0.6% and the S&P 500 climbed by 0.1%. The Nasdaq fell by less than 0.1%. Nvidia, Intel, Micro and other AI-related stocks rebounded, though shares in Tesla fell after another annual drop in deliveries toppled its position as the world's top EV maker. Benchmark 10-year Treasury yields ticked up to 4.188%, while gold prices slid to $4,314 per ounce. U.S. futures moving marginally in the aftermath of Maduro's capture. The Nasdaq is up by 0.25%. S&P 500 rises about 0.1%, and the Dow falls by less than 0.1%. Asian markets rise at the get-go on Monday, with Japan's Nikkei 225 up over 2.5%, with South Korea's Kospi up by nearly 2%, and Australia's ASX 200 climbing by less than 0.1%. And a look at our own markets at the onset of the first full trading week of 2026. PSEI opens this Monday lower by about 0.33%, 6,115. The stock market started the year on a high note, closing last Friday higher by over 1.3% as investors went into a buying spree. Analysts expect the PSEI to rebound this year due to the combination of easing inflation, potential rate cuts, and attractive valuations. So they anticipate market jitters in the first few months of 2026. As for the Philippine peso, it opens today a tad weaker, 58,888. The peso was range-bound on Friday, closing at 58,841 against the greenback amid a lack of catalysts. The local unit is expected to move sideways as traders await key economic figures out this week, including inflation and U.S. labor data. The 10-year government bond yields ticked down 6.052%. In related news, the Bureau of Treasury will auction off 27 billion pesos in T-bills today, with the government targeting to raise up to 50 billion from a dual tenor T-bond offering. As a result, yields in the T-bills and T-bonds may slightly rise this week, says Mike Ricafort of RCBC. Analysts expect listed telco and ICT companies to post growth in 2026, driven by sustained demand for fiber data services and expanding non-telco businesses. Peter Garnace of Unicapital Securities said digital finance platforms such as Maya and GCash are emerging as key growth drivers as more consumers shift to cashless transactions. Data centers are also seen as a major boost, supported by rising local data use, artificial intelligence, and the government's push to position the Philippines as a regional hyperscaler hub. Garnace also expects the Konektadong Pinoy Act to reshape the sector by opening opportunities in wholesale data and digital inclusion. Meanwhile, RCBC Chief Economist Michael Ricafort said investments in data centers and AI could become game changers, creating new sources of growth for the sector. And with us now for more is Jonathan Ravela, Senior Advisor at Reyes Tacandong and Company. Welcome back, Jonas. Happy New Year.
Happy New Year.
All right.
Good morning, Cathy.
Good morning. What's your assessment of how President Maduro's capture is impacting the global oil markets?
Well, basically, I guess the key word is more of a knee-jerk reaction of the markets in the near term. Most likely, we'll see some uncertainty. But again, hopefully the outcome will actually be lower oil prices now that probably the Venezuelan oil will have more opportunities to go into the global market. So that should be good for the Philippines, particularly we're a net importing country.
What about the geopolitics, though? Is that much of a concern in how that filters through to the Philippines?
Well, basically, if the geopolitical noise would probably be just, say, within 1 to 3 months, I think that could actually, it won't matter much. But if there's a speedy resolution to all of this, then we could probably go back to normal. And I think this is how the Asian markets are looking at it, basically because it's a net positive for oil.
Looking locally, we have inflation figures out tomorrow, Tuesday. That's the December inflation figure. And you're at the far end of all estimates of those we surveyed, 1.1%, even lower than the Bangko Central's lower end of its own forecast. How come?
Well, basically, I guess we've seen a very significant drop in prices, and I believe that probably it would be the lowest compared to the last 10 months. It will actually be the bottom. And moving forward, again, we have the impact of geopolitical risks, eventually consumption coming back probably in 2026 could slightly push inflation back to probably 2.3% for the full year.
But the corruption governance concerns, I mean, I've just spoken with Bobby Claudio a few moments ago of the Philippine Retailers Association. He did say that spending was cut because people were concerned about the governance issues.
Okay, let's look at the corruption issue like having a toothache. So at the moment, the government is doing its best to probably try to address these governance issues. I think at the moment we are taking pain relievers. I think people are waiting for a tooth extraction, meaning somebody to go to jail. But sooner or later, people will realize that life has to go on. And consumers are waiting, are hesitant to spend because of the uncertain business climate, which the BSP at its recent report on the business and consumer surveys highlighted a divergence, meaning consumers were hopeful that prices are coming down, while businesses continue to take a negative tone due to the governance issue. So people will remain hesitant to spend. But once we start seeing over the course of 2026, more cases to be filed, government in addressing infrastructure spending, particularly with the 2026 budget, confidence will slowly come back. And once we see private listed companies with their capex moving on in 2026, could eventually spark the return of this risk appetite. And
Yeah,
that's
but it all
why
depends
I'm
on when
looking.
that tooth extraction happens. I mean, real wages, job creation, are they keeping up enough to support your slow but sure consumption story? Or are we now seeing signs of household balance sheet stress building?
Well, basically, I think at this point in time, people are waiting for a signal. And I think once the fourth quarter numbers could be a surprise, it's not going to be 3.8 or 4%. If it's going to be higher than 4, then that could eventually provide the turning point. So we could have probably seen the peak negative sentiment in 2025. Right now, what we want to see is hopefully whether the tooth get extracted or a root canal. The key idea is to eventually see that things are slowly shaping for the economy. Whether it's going to be, of course, rate cuts are good, but rate cuts can only do so much.
So
But
if rate
once we
cuts can
start
only
seeing
do
the
so
sentiment,
much, and it's really
yeah.
pain, whatever it is, it's root canal or tooth extraction, how do we trade then? Risk appetites for maybe the first quarter of the year. What is your recommendation?
Well, basically, I think the valuations are quite attractive for long-term investors looking at food, retail, real estate, and infrastructure. Probably are good long-term positioning. Of course, the key word is accumulate because there's still risk on the downside. I'm a bit optimistic in trying to look at 6.5 by year end. Hopefully that we get these things moving, and if typically the rally begins at least maybe around early 2027,
All
probably
right.
moving to around 7.1 if things really do materialize in the first half, particularly the tooth extraction.
I'll hold on to that 6,500 on the PSCI. Thank you so much, Jonas Rovelas of Reyes, Takandong and Company. And that is it for Money Talks. I'm Cathy Yang. Catch us again tomorrow, 9:30 a.m. Kapatid, we are One News, all sides, all the time. Have a great day ahead.